looked pretty bearish. It wanted to close lower. Now, it appears to be having some second thoughts. We could, by the time we get a new candle, okay, in 26 minutes, we could have a green body, and we might not. The final 5 to 10 minutes of the hour and the first 5 to 10 minutes of the hour are really important, and that's why I encourage watching an hourly chart and to see what the behavior is in those final 5 to 10 minutes of the hour of this candle, and then the first 5 to 10 minutes of the new candle. Often that's where you'll see the majority of the activity. Again, on the half hour, because a lot of people are using day session charts, and that's when they get their new candle, you kind of go through that same process. It's really more like 5 minutes before to 5 minutes after, both the top of the hour and the half hour, okay? Depending upon who that trader is and what kind of chart he's using, that's the information he's being fed. All right, so crude is still doing its dance, so we'll let it dance. Let's see what the ES looks like on a smaller time frame. Okay, bullish cross, price pulling away. You got the cycle in the right place. Now, if price were to just pause here to pull back to the BBC, okay, this would take your green line down to the bottom, okay, which is what you'd want to see. That would give you the perfect bullish divergence for a long trade. Is a long trade permissible here? Well, we're above this trading zone, the weekly zone. So while we wouldn't trade short into a zone, we will trade long coming out of a zone. Big difference. Coming into it, you could be running into a brick wall, okay? But going out of it, think of it as a butterfly being set free. Okay. Any questions on this setup on how it works? Bullish cross, price pulls away, price pulls back, up close, green candle, buy the open of the next candle. Dan, I know you can't hear me because you just said there's no audio. And so I typed into you, yes, there is audio. Okay, all right, see how the green line working its way down as price pulls back, attempts to pull back to the BBC. Now, price is unable to pull if there's so much momentum here, if price is so intent on going higher that it can't pause and relax enough, and it just did. Now, see how you don't have a complete touch there? 15 minutes from now, when you look back, nope, now you got a touch. Now there's no question. Okay, you won't have to argue with yourself later. Did it or didn't it? Okay, so bullish cross, price pulls away, price pulls back, up close. You don't need, all you need is to just be long, really, at the open of this candle, which was 2090. You don't, in this instance, you don't need a close above the trend line. It's just the basic trade setup. So where did that DOM go? Come back. Okay, maybe I got it set up on this one. No. I don't think I do. So let's see. What was the open? Open of that candle was 2090. Now it's going to fly away. See, butterfly. The open was 2090. So again, I want to see if I have my strategy engaged. I don't think I do. So here the cycle's turning red. Green line is still below the 50-yard line. So there's a limit order on a demo platform at 2090. So I wanted to get this. I'd like to get this strategy. Maybe we can have Bert come in a minute and walk us through that, and everybody that hasn't set theirs up that wants to can. Probably not, Amon. You still there, Bert?
Yep.
What's the chance here in a few minutes of you walking everybody who's here through the process of setting up that strategy? Do you want to do that?
Yeah, I could do that.
I thumbed it up here, and now, well, we'll just wait until we go through the process. Just wanted to see. I've got it engaged, but
do you want to?
I thought the other night. I'm sorry.
Do you want to ask if everyone wants to do it, or would they rather watch you take or put on trades stuff? Because I thought about that last night, but I didn't want to. I wanted to be about,
Jim says,
setups.
Oh, well, you know what? They get plenty of that every day. No, we're not in a weekly trading zone right now, Jim. We're above it. That's what I was just talking about. See, we'll trade out of a zone. We don't trade coming into a zone because that's the potential there is to run into a brick wall, okay? But here, we're actually above it, and so we'll trade out of a zone, but not into a zone. Does that make sense? Yeah, the cycle up here turning red it's not the most favorable of conditions, Amon, but it's not the most, you'd much rather have it blue. You'd rather have the green line laying flat down here and a blue line laying flat up here. That's your perfect bullish divergence condition for this trade. So do you guys want to see how to set up the automated strategy? Where did the deadgum DOM go? It's disappearing on me. Let me pin it. Oh, I thought I would pin it. I did. I pinned it back there. Okay, so heavens to Betsy, I didn't even have any kind of, I didn't have anything set up on this. So,
That's confidence in what you're doing.
Yeah, apparently. Right click, we'll go trailing stop. Yeah, that was a lesson in what not to do. So there you go.
And somehow you got short. Dwayne,
Huh?
somehow you got short. Just hit exit at market and cancel.
Somehow I did, didn't I? And I hit right for trailing stop. I've got a couple different orders working. Yeah, let's just hit exit. Everything. Get out. Get out, get out. Okay. All right. Now, so Jim, I want to talk to you for just a second about your question about us being in a trading zone. See, the zone is 89.90, and we're above that. Do you see it? So Michael always talks about we're in a weekly trading zone. When he says we're in a weekly trading zone, what he means is we're literally inside of a weekly trading zone. Like the zone, the way it would look over here would be 2089 to 90. Is that right? 2089 to 2090. So there's 2090. There's 2089. 2089 to 2090. Let's take a look here. Yeah, Jim, you know, it may have dipped in there at that moment. But again, we will trade out of a zone, but not into a zone. So even still, I'm okay with this trade here. Okay, that's really important. I hope you guys all grab a hold of that if you've missed that in the past. Okay, now if we're going long, what we won't do is, as we approach, if we were to just start, you know, barreling higher, once we get within 2 points of this zone, once we get within 2 points, we won't take any more long trades because we could potentially be trading into a brick wall. However, once we pop out the other side, okay, and then maybe pull back, confirm good support, and take off again, now we would trade going out of the zone. We won't trade coming into the station, but we will trade as we leave the station. And that's kind of what this was all about here. And really what it's all about, okay, bigger picture. I know you guys are used to looking at a much smaller, faster time frame and going from market to market to market to market to market every morning. And that's why this is a good opportunity for you to just see things a little differently. The most important thing that I have, the most important question I have in my mind right now regarding the S&P is how it's going to close this hour. It's been fighting a battle, okay? Early in the hour, it ran way down here, but then it ran back, okay? We had a red body all the way down to here at one point. This whole thing was red. Now, we got 12 minutes left in the hour. It could end that way, see? It very well could end that way. We don't know. But how the hour ends gives us some important information to work with as to how we will trade the next hour. The way this hour ended, okay, it came down, it tested, bounced off of support, and closed here. We have to take that as a somewhat bullish cue. We don't want to get carried away. Then this candle opens, it does this. Now, just imagine if, for instance, we closed right here, right now. Okay, and then the next hourly candle opened, and then we slowly worked our way higher this afternoon. On a historical chart, you could look at this and go, oh man, how come, why didn't I see that coming? I mean, it held and it held, and, you know, well, let's let this hour close and then see what it looks like. So Bert, I think everyone said they would like to have you walk us through that strategy. So if you're ready, I'd like to grab a cup of coffee first before you do it, because I want to make sure. I messed mine up the other night trying to change it, which, in fact, I'm going to step away from the screens right now for just a second, guys. So I'm just stepping downstairs for just a second to grab a cup of coffee.
Want me to show my screen?
Do you, well, would that be better, Bert? Or I'd kind of like to show mine, and so that I'm physically walking through the, you know what I'm saying? I'm physically,
sure.
but you can still grab the screens for a minute if you want to.
No, it's up to you.
Yeah, go ahead. Just go ahead and grab them for a minute. So give everybody something different to look at.
Okay.
Guys, this is a great time for questions. Remember, when Michael's jumping from market to market to market, a lot of times you have questions that he never intentionally misses a question. In fact, he'll slow down and say, have there been any questions that I missed? But I know sometimes people get aggravated and frustrated when their question isn't answered straight away. So that's just human nature. So today is a great day to ask any question, okay? Because we're not going to jump around. We're not going to move fast. We're going to take it nice and slow. That's the Bert and Dwayne show. Old school. I didn't say old men. I said old school. Yeah, my old man. So I can't see what you're doing right now. Tell me.
Oh, I'm just switching to chart to chart to chart. If I was waiting for you to get coffee, or
I am. Yeah, I'm pouring the milk as we speak.
oh, okay. I thought maybe you had to go downstairs, or
You thought I was going to Starbucks? No, I did have to go downstairs.
Yeah. Okay.
It's not like Downton Abbey. My flight of stairs is like.
Right, you don't ring a thing and someone comes up with a
It's
plate.
it's only like 10 steps or 12, I think.
Okay.
It's not 127. You watch that show with your wife? She make you watch it?
I don't. She does. From time to time,
show, man.
I'll go. Yeah.
That's a great show.
Sure.
Who could not have wanted to live upstairs at Downton Abbey? I mean, come on.
That's true. All right, well, guys, gold here is a mess. This is a 4-tick range on the gold. So nothing to do there. Crude oil, we had the inventory report. We had a 10 million barrel build. So that certainly should be bearish. Possible long setup, believe it or not, here. And practice drawing your trend lines, because we are getting the bullish cross here. We are building some bullish divergence. And if we get enough close here, this might be a potential long. And here we go. Whether it wins, loses, or draws.
Tell me what market you're on, and I'll
April crude.
catch up to you. Okay.
I'm sure this one looks like it'll stop out if it hasn't already. 81.
Oh, did you say May?
April crude.
April, okay. All right, I was going to say, wait a minute, I'm been in the wrong market here. GCLJ.
Yeah, depending on where you got in, could have been stopped out already here at 73, just to keep this real. We'd have to close above this before we get any inspiration on this one. So this is, you know, but in actuality, this would be one I would have considered. So we had the bullish cross, we'd pull back to the BBC, we drew the downtrend line. We had both a close and above the downtrend line. This might be one that just didn't work out. So if I saw your screenshot, or if you're showing me, hey, is this a valid trade, I would have said yes. So let's see if we can.
We've got 6 minutes left in the hour, guys. And on the hourly chart, price is, you know, one tick below the trading zone. So again, I put a lot of stock in where that hourly candle closes, gives me some indication of what I may look to do, or what the market may look to do in the following hour. So, you know, since you've got the charts now, if you're comfortable keeping the charts, if you
I could go either way. Go ahead.
all that, I can take them back, and I can.
Yeah, take them back.
They can watch.
Buzzes.
They can watch my screen as we go through setting up that DOM. Do you want to do that? Is that better?
Yeah, I'll make you the presenter. Because if my phone buzzes, then I could pop out. And...
Yeah, gotcha. Okay. All right, you see my screen again?
Mm-hmm.
Okay, so here we are, guys. Right here, inside of the weekly zone. Inside the weekly trading zone with 4 minutes left to go. Okay. And how this closes the hour is important. At least it's important to the way I look at the markets. See, here's a good example here. These are very similar. You had this big red candle, this wick down here. This one closed just below, although this one closed above. But then this next candle, you had a big red candle. But by the time the hour finished, you had a green candle, which led us up to the zone overhead. Okay. So with that said, Bert, I should simply open a DOM, correct? And click on the little guy and go configure.
There you go.
Multi-bracket ES.
So what you want to do is hit new, give it a name. Let's give it a CFRN brand name.
CFRN. Okay.
Okay. Now, first thing you want to do.
Display as ticks, correct?
There you go. You do it in ticks. That way, everybody knows everything should have an 8-tick stop on it, so you don't have to do the math. Quantity, just hit 1.
How about where it says bracket 1 disabled?
No.
1 on quantity. We don't need to change that to enabled or anything?
No, as soon as you hit the 1, it'll...
Oh, I see. Okay. It automatically just did all that. Okay, so far what we did was we put display price as, guys, if you want to get this strategy saved, open up a DOM, click on the little guy up here, and then click configure.
Yep, hit new, and the box will pop up, and you're going to give it a name, and then the properties will pop up. And that's what we're working on now, is properties. So we displayed everything in ticks. So everything's all in the variable is all the same. Quantity, we'll just keep it simple, 1.
Okay.
The target, okay.
Mm-hmm.
So profit target, I always use 8 ticks. This was meant for the concierge because the concierge were trying to get 8 ticks on a lot of the markets, which equates to the $100. So where it says factor.
Okay, right here, factor. Yeah.
Just make that look like an 8. Okay.
Okay.
Then just underneath it says type.
Mm-hmm.
So you can either have it a limit. That means the price has to trade through your price. All right, it has to trade through your limit in order to execute it.
Okay.
At least you'll be guaranteed that price. Or you can have it set as an MIT, which is a market if touch feature, which not all platforms have, but an MIT says, hey, if you just touch the price, just make it a market order and I'll accept whatever slippage there is.
Typically, the
was-
slippage is 1 tick, but it could be it could be more, right?
Yeah, you just don't know. You know, the market
But
determines
you should count on it being at least one
Correct.
tick of slip, right? Okay.
Yeah.
So what is it you recommend? Okay, guys, over here you can see where the hourly closed. Okay, we got a new hourly candle on the hourly chart, and so any move above 20, above the high of this candle right here, I would consider bullish, and I would, in fact, if somebody just says, hey, you got a good trade going on right now, I would say, yeah, 2093 to 2095. I like that. Okay, that's the type of trades I give on the radio show when I leave every day. The 93 is getting me above the high of this, and it's getting me out before this low here. And you're like, well, why does that low even matter? Well, trust me, it matters. And I'll be happy to go into some detail on the radio show today or later here this morning. We've got about another 20 minutes, and then I have to bug out and get ready for the radio show. But just remember, 93 to 95, that's 2 points for the day. That's if I were on the radio, that's what I would say. So, Bert, you recommend limit, correct?
Yeah, just
Going
put a
back
limit
to the
in.
brackets?
I get it.
Okay.
Mhm.
All right.
Next one
Nice.
below that is OCO.
Uh-huh.
That's called order cancels order. So either the profit target will happen or the stop will happen. If either side gets hit, it'll automatically cancel the other side. So if you'll have a target in, you're also going to have a stop in. So if the stop gets hit, the platform will automatically cancel the target. If the target gets hit, it'll automatically cancel the stop. So you don't have any loose ends. So we want to have that on.
2 options, off and on, and we want it on. Correct,
Yeah.
just like it was, okay?
All right, so then stop feature. Okay, that's what we're working on now.
Okay.
Okay, the factor should be 8 ticks.
Okay.
Okay, the next one should be what kind of stop it'll be. So
Okay.
go ahead and hit the drop-down box. We're going to select trailing stop feature.
Okay.
Okay, so that means if the market goes up a certain amount of points or ticks, it'll move our stop up. Okay, so the trailing trigger factor, that's the market will need to move by this amount in your favor before the stop starts to trail. So that trailing trigger factor should equal 4. So if the market moves up 4 ticks, okay, your stop will be moved up. Okay, now the trailing stop factor, okay, that's the amount the stop will be moved once the factor has been reached. This one's going to read 8.
There's the stop. There's the 8-tick stop. There's the 8-tick target. Now what this is devised to do is, once there's 4 ticks of profit in the trade, it will, and I'll put this on ticks. Once there's 4 ticks of profit in the trade, it will automatically move the stop to break even. Okay. And remember, this has to be highlighted. Okay. And as I hover over it, see how it says CFRN, and that not only do I have the strategy active, but I know, because you might have multiple strategies. In fact, I want to walk through one where you're looking for 10 ticks instead of 8. Because that's where I messed mine up the other day. And so I'll call that one CFRN 10 tick or whatever.
And then I think the bonds and some of the other markets, the stop and targets are a little bit wider or tighter. So.
Yeah, the bonds, it's 4.
Yeah. Tonelli, to answer your question, have I ever considered not trading against the YBR? No, actually I use the YBR on larger time frames, like an hourly, 2-hour, 4-hour, and daily. I'll use that as significant levels of support or resistance. So no, a lot of times I'll actually take action against that level on larger time frames, not on smaller time frames. So.
Okay, we just got a little bump to the upside. So what we're watching for here is just to see this thing go to 4 ticks and then see it automatically bring our stop to break even.
Yeah, it'll automatically, Aman, it'll automatically enter you in the trade at that price. If it's a limit order, all right, it's going to be that price or better. If you're going to be like the concierge service, if you're going to be buying it above or selling it below a certain level, you're going to be buying and selling on stops. So it's going to enter you into the market. There could always be slippage. I would tell you, if you had to write something down, write down a tick worth of slip is the norm under normal conditions. So let's hopefully this thing will go up a little bit and activate it so we can look smart here.
Sure, we'll look brilliant. Absolutely stunning.
There we go.
Okay,
so you notice we went to 92.
See there? Right there. The stop just jumped to break even.
So when you're doing the concierge service,
right here, if you do this, now I'm at break even plus 1. So not only do I have no risk on the trade, I have unlimited possibility. You guys hear that? No risk, unlimited possibility. Okay, now on a short trade, you can only go to 0. But on a long trade, it can go 8 ticks or 800 ticks. You never know. So that was a very nice trade. It worked in our favor, and the strategy performed flawlessly. So, as a recap, when we entered that trade, I went long simply based on the fact of where we were sitting, where the last hour closed, fought the battle, managed to close above the zone. So I took the long trade just really to show the strategy worked. That's the only reason. When we entered that trade, it automatically placed our target for us and our stop loss. It gave us an 8-tick target and an 8-tick stop loss. As soon as we had 4 ticks profit in the trade, it automatically moved the stop up to break even. So now we're at 20.93 1/4. Now, is it going to continue to climb? I don't know, but we can watch it all over again. Put in a limit order there at 93, see if it gets filled. Let's see, can we put a future buy order strategy?
That's exactly what Dwayne does with the concierge. So if they, let's say, just hypothetically, Dwayne says, hey, get long above 2095. Go ahead. By the way, Dwayne, hit cancel all. I don't know what you got going on there, but you got some things. Like,
I had a limit order to get built 2093.
All right, I'm sorry. If you were trying to get long, let's say I'm on at 2095, Dwayne could just go up into the green area and right-click. Go ahead and do that, Dwayne. 2095 in the green area and right-click.
About 2093.50.
All right.
That way we might actually see that get activated.
Yeah. So what that'll do is, if that's a breakout area based on, you know, the concierge or whatever it might be, yeah, that'll keep the buy side working. And then in the middle of the night, if it goes up there and tags it, it'll enter the order for you. It'll enter the stop. It'll enter the target. And if it goes 4 ticks,
no, keep going. I'm sorry.
And if it goes up 4 ticks in your favor, it'll actually move the stop up to break even. So if you are away from the screen, it's going to do all of it for you. Okay. But Dwayne and Michael, you know, including myself, we don't recommend that you know, set it and walk away. And we still like you to watch the screen and monitor it, because you never know what could happen. But if you wanted to have, you could implement this and then have the strategy, you know, just, this will create some discipline, I guess, is another way to look at it.
Okay. Now, what I want to do, let's see if this thing will trigger here in just a minute. I'd like to walk through, we did that on the CFRN. So you hover over the strategy. It says, I did earlier, there you go. See, it says CFRN, because that's what we named the strategy. But I'd like to do one where we did this one with an 8-tick target. I'd like to do another one with a 10-tick target for the crude, the gold, the oil. And we should only have to change one thing, but whatever the one thing was I changed the other day, it was the wrong thing, because the next trade in that video, so.
Was that the one where you did the gold? You were doing the DAX and then you went to the gold?
Yeah, I think that sounds about right.
The only reason it didn't happen is because you didn't have it.
In fact, I can just move this over to the side. I can put this on, well, I'll just put it on a 10 crude. That's $10 per tick. Open a DOM for crude. Okay. Now, all of this stuff down here, this should be disengaged, correct?
Yeah, you can just go upstairs or go up to the top there and to the right, to the left. Get rid of the Tinker Toy. Yeah, you go to the right to try. Yeah, just left click. There we go.
Okay. So strategy, we're going to configure a new strategy.
Hit new.
New, and we're going to call this one CFRN 10-tick. There we go. So there we go. We'll call it CFRN 10-tick. Okay. All right. So we want to display price as ticks, quantity 1, All right, now, target factor, 10?
Mm-hmm.
Okay.
Rod, the reason why your DOM doesn't show the CFRN strategy is because what Dwayne is doing right now is what you have to do to put the strategy in. You have to duplicate it in your platform.
Open your DOM, and now in the members area of the website, there is the video where Bert walks you through exactly what he's walking us through live right now. Okay, so factors 10.
If you need help, Rod, let me know. I'm a phone call away. If we have to do a screen share, we'll do it too.
Type limit.
Yeah.
OCO on.
Yeah.
Stop.
Okay.
Factor.
8.
Now, what that means, guys, is we want an 8-tick stop loss. That's what that's asking. Okay. Type. Do we want the trailing stop, Bert? Is that correct?
Yep. Trailing stop feature.
Okay.
So the next one below is the trailing trigger factor.
Is 4.
So, yep. So that's the amount that you want the market to move.
Trailing stop factor.
4. So once the market moves 4 ticks.
Okay, the trigger factor is 4. The trailing stop factor is
8. Because you have an 8-tick stop, so it has to move 8 ticks to go to break even.
okay. Trailing mode once.
Once, yeah.
Once.
That's it.
And so the only thing that was different was here, I just needed to change the target factor to 10 instead of 8. That was the only difference, correct?
Mm-hmm.
Okay. All right. Beautiful. Okay. Guys, anybody have any questions on how to do that? What we just walked through. Anybody have any questions? Oh, and that, okay, let me click OK. Save changes, yes. Okay, and then let me move this over here. Let me go back to here, and then let me go here, okay? So the order triggered, and I'm sorry we missed it. It moved our stop automatically to break even, and there's our target up there. Strategy courtesy of Bert. So while we were looking over doing other things, we had put our order in to get long at 20.93.50. We got triggered in. It gave us an 8-tick target, an 8-tick stop, and our stop was moved to break even at 4 ticks. And so now we just went to break even plus 1. So we have no risk on the trade and unlimited upside possibility, except we have a target, and so that limits our possibility. Michael, as you know, doesn't use a target. He leaves it open so he can catch the runners. Okay, so that was a beautiful example of how that works. And luckily, I recorded it, so I'll ring the bell for myself. All right. How cool is that? And there's the 20, and there's the,
I gotta pop out of here.
And there's the 2093 to 2095 that I had suggested to you guys based off how the last hour closed. Okay? Is that magic? No. I'll go into, in fact, I got to bug out of here pretty quick, but during the radio show, because I don't have anything else to talk about, I'll go over this and why and answer any questions you guys have. Okay, Bert, hey, thanks for hanging out with me.
Yeah, you bet. See you guys.
You made the 2 hours just breeze by. I was so nervous. I couldn't sleep last night. I tossed, I turned.
Yeah.
There you were.
All right.
You go, Huggy Bear. Thanks.
All right. See ya. All right, bye.
Bye. All right. Any other questions, guys? Okay, so now we have set up two different strategies. The CFRN, which is for an 8-tick trade like the S&P or soybeans, and we have the 10-tick trade, which is for crude or gold. Okay? And I should probably figure out how to make these go away, but I'll just know that CFRN is my 8-tick. And yeah, let's not mess it up again, Dwayne. Okay. All right. So, any questions? Joseph says, how to trade using the hourly chart. Well, that's a big question for a short amount of time. Richard, yeah, in the members area of the website, there's a video and a PDF. I put it up last week. Just go to the members area of the CFRN website, and on the initial opening page, you'll see the automated strategy video. Just click it, and it'll play. And it's Bert, and he'll walk you through the process like we just did here. Plus, I recorded today's session, so we could probably post that, I suppose, somewhere if we needed to, but Bert does a fine job of explaining it, so there you go. So Joseph, trading the hourly chart it's really no different than trading a 1-minute chart. The markets are fractal in nature. Now, remember I said that this was a concern to me. If we draw a straight line, if I can, that's straight, yeah. You'll notice that it was this area where you know, we run into like a headwind. Doesn't mean we're going to stop dead in our tracks. This whole area right here bears watching, okay? Here to here, okay? This whole area. You got these tails here, you got these. See, this was once support, okay? It was support. This area here was support for 1, 2, 3, 4 hours. This area served as support. And then when this happened, okay, no longer support. High probability that as price pushes up, this will become resistance. Does prior support always become new resistance and vice versa? No, not always. You'll hear it expressed different ways. The ceiling becomes the floor. The floor becomes the ceiling. But the market will find it challenging to work its way up through here. Why? Well, because a lot of people have and utilize that same knowledge and think along those same lines. So if you have a large group of traders who believe that this area is going to be difficult for the market to get through, at least on the first attempt, what happens is either you have people taking profit, as we just did on that little demo trade that we had going on, okay? We took profit, so you've got that faction, and you have another faction that says, I am so strong of belief that this will be good resistance that I'm going to sell into it, okay? Now, if I were going to sell into it, I would go to a smaller time frame to do that. I don't really have an interest in doing that, but if I did, go to smaller time frame, like let's go to the ES. Well, here, let me pull up the one that's got the indicators on it. And that's not, oh, it's over here. Okay, so let's switch this to the ES real quick. Okay, give me indicators, there we go. All right, bullish cross, price pulled away, price pulled back. See, physical touch. Up close, entry would have been the open of this candle. Now, that's just trading based off of hourly chart. Trading it as a slingshot trade, we did not yet have the proper divergence down here, okay, before somebody corrects me. Now we finally have the proper bullish divergence, okay? And I appreciate it when you guys correct me, because I'm not in here with you guys training you on these little nuances each and every day. It used to be me and Michael both, but there's so much to do. It's like somebody's got to do one thing, somebody's got to do the other. So I don't ever want to get your head twisted in a different direction than he's trained you and taught you, okay? That's the last thing in the world I want to do. So you got nice bullish divergence. Could you have a potential momentum trade here? I mean, can you draw a trend line like that and then wait for a close above the trend line? Yes. You can also have the benefit of knowing that there's a potential area of resistance overhead. Now, I want you to think about how long it took us to go from down here up to here, and how we've dilly-dallied around, okay? Because the market has to absorb all the people who are exiting their longs because they think this area could be trouble. And the market has to absorb all of the new shorts coming into the market, initiating positions, believing that all this was an up leg, if you will, in a down move. Let's scrunch this up, for lack of a better term. If we go all the way over here to the most recent swing high, viewable on an hourly chart, and if we draw some fibs to make it all fit, do some more scrunching. Okay. All right. So what I've done, I have drawn fibs from the most recent visible swing high here on the hourly chart down to the most recent low, okay? A move of this magnitude, when you get a retracement, almost always get a 38. Well, you almost always get a 24, but you almost always get a 38, okay? And so there are the Fibonacci people, okay, who are looking at this going, that is a troublesome area. Now, I gave you the support and resistance reasons why this area might be difficult to get through. I didn't say it couldn't get through it. I just said on the first trip up, it could run into some headwinds. You could have some difficulties. So I gave you the support and resistance reasons. Now I'm giving you the Fibonacci reason, okay? It's approaching a 38% retracement. That is enough to send longs out and bring shorts in, okay? So that puts pressure on what's an otherwise bullish move trying to take place in the market. Where's the next area of conflict and difficulty going to be? If we get through this area, look what we got right overhead. Another weekly trading zone. When the market tried to rally earlier today, it could not get up through that area, okay? And so it has proven itself to be, remember, it was support, and then it wasn't. This support became resistance, and down went the market. So if the market can get back through this area, as soon as it gets through this troublesome area, it's got to deal with this area, okay? 50% fib retracement and weekly trading zone, which everybody knows about Fibonacci. Not everybody has access to the weekly trading zones, okay? But we can see from a support and resistance perspective that price moved down, pulled back, our zone kicked in just as it served as support here and here. It served as resistance here. Now, on top of that, it just so happens that there's a 50% fib retracement there, this yellow line, okay? Reverse fibs, okay? I'm pulling from the top to the bottom, not from the bottom to the top, okay? Anybody have any questions on that? Because I see the time has gotten away from me, as will happen when I start yammering. And I got to get ready for the radio show now, which doesn't leave much time for a break, a nap, a walk, a constitutional, or any of that good stuff. So, but I don't want to leave any questions unanswered. Now that ES trade over here that I was showing you on the 4-tick range, remember I drew the trend line a few minutes ago? Look how many candles, 1, 2, 3, 4, 5, 6, still trying to get a close above that thing. Why? Well, see, looking here at the 4-tick range chart, we don't know why. We don't know what the big picture issue is. Voila. Now we know. Now we understand what the market's struggling with, what it's fighting against. Will it be able to overcome the obstacle or not? I don't know. But at least I know the obstacle is there. I'm not trading blindly. You follow me? That's why I always recommend that everybody have an hourly chart of whatever market you're trading. I always have the hourly S&P running, but if you're like a Russell trader or you're a crude trader, or whatever you trade, I suggest you have an hourly chart running in the background, something that you can reference, bigger picture, and keep track of things such as this, okay? Support and resistance has been around forever, will be around forever. I know that some of my co-hosts say that, you know, it's like not a big deal, but I have another co-host who his whole business of trading is built on support and resistance. And anyone, see, there's no magic in support and resistance. There's no black box. There's no look at me and the clever trick I can do. Support and resistance is there. It's plain and obvious for everybody to see. That's why it's so effective. I used to spend untold hours trying to figure out how I could see what nobody else saw. Oh, because that would be my hook. That would be my end. That would be the way I would win, right? By coming up with that one thing that I could see that nobody else could see, that secret. Ultimately, I figured out that the secret was not being able to see what everybody else couldn't see, but learning to see what everybody else did see. Because when everybody sees the same thing, they tend to act in a certain way. It's like you take a crowd of people. Well, we know that in a crowded theater, if you yell fire, well, everybody's going to get up and run. That's just, you know, one shoddy little example. But group behavior, crowd behavior, it's well documented how people behave under certain situations and certain circumstances. And so traders, because they want to make a profit will tend to have certain patterns of behavior. So yes, you're trading the chart. Yes, you're looking at these candles, but you're also trading the mentality of the crowd. Now, you don't have to second guess them. You can, in your mind, know what the crowd is likely to do at any given point, and then be prepared to participate in that move. In other words, if sellers really do come in early and start to drive it down, oh, okay, I understand that, and I understand why they're doing it. Let me ride their coattails for 2 points, and I'm good. Or in another situation where buyers could potentially come in early or on cue, boom, there they show up perfectly, boom, at the 38% retracement, at the weekly trading zone, at the previous area of support, whatever it is that you're looking at, boom, the buyers show up on cue, the market starts to rally. You understand why. You're not just blindly buying because you see a green candle. You were waiting to see if, in fact, they would show up and do what you expected them to do. They showed up. They did. Boom, you're part of the move. Remember, if it's the S&P you're trading, you only need 2 points, which is 8 ticks. If it's crude or gold or something else, 10 ticks, okay? Floundering around in here today on the S&P. We picked up a few ticks, just floundering about, okay? All right, with that, now, Michael normally leaves this room running, but when I shut it down, I have to shut it down so I can open the other room for the radio. Let's see. Verb used without object. Dilly-dallying to waste time, especially by indices and vacillate, trifle, lauder. This is the definition. Okay, I do recall using that term earlier, Keith, but I don't remember in what context I used it, but thanks. I appreciate you sharing that definition. Dilly-dallying, I think it meant just like standing around doing nothing or spinning in circles. I think I was using it in that context. How do you draw the continuous lines for your weekly zones and alerts? I take my horizontal line tool and I drop it. Now, if you double click it, you can configure it all kinds of ways. I can make it say WTZ. I can make it say, it used to always say WTZ, but then when I started using the same line for the concierge alerts, it got everybody confused, so I made it so that it doesn't say that anymore. Okay. Text option. You have hidden, current value, custom text, and current value. Okay. And then however you set it up, like you might want it to be a straight line, you might want it to be however you want it to be. Up here, you can change it, make it a dash, like the text, alignment, all these different things. Upper, in other words, do you want the text to appear above the line or do you want it to appear below the line? What font do you want to use? What size, what color, all those different things. Alignment, do you want this number to show up over here, or in the middle? Okay. All right. I got to run, guys. I'll continue answering questions in the on the radio show. Close this, get rid of this before I confuse myself. There. Dwayne's candle on the last hour on the S&P with that long wick and short body considered a doji. This one? Yes, it is. And in the context, see, context reigns supreme when learning to speak candlestick, okay? And so after a nice down move like this candle closing here with this long wick extending below the weekly trading zone. I mean, I went on and on about this candle, remember? And I said how important how this candle closed would be in regards to the coming hour. So does that make me a prophet or a magician? No. That's just how markets work, okay? Now, could it have turned out differently? Absolutely. There's no absolutes, no guarantees of any kind. It did the typical thing. It did the common thing. It didn't do anything unusual or weird or different. It did, if there were truly such a thing as a textbook example, this, you saw it right here live in real time, okay? So if I accomplished anything at all today, other than helping you set up your automated strategy, it was this, helping you to understand this bigger picture. If you understand this bigger picture, when this green candle starts to build, no matter what your 4-tick range chart tells you, do you really want to be short? Maybe you do. I don't know. It's a question. So we just hit the 38, see? So that first obstacle, the market finally, how long did it take? Quite a while. Finally overcame it. We've got, what, 18 minutes left in the hour of this candle. Okay. Now, could this thing reverse here and end up closing the hour with a red body? You better believe it could. Could it power its way through the 38 like it's not there and then come to a standstill at the 50? Sure. Anything is possible, okay? That's why I try to stay away from the preconceptions, from the bias. I want to keep my mind open so that I can actually see what's happening. Not what I want to happen, not what I think should happen, not what I thought was going to happen, what is happening. Because if I can be in tune with what is happening, what's really happening, see, and we have all these filters and lenses that we look through because we read this or we went to that class or we took that seminar. And so if we can get rid of all that stuff and just really see what's going on, then we can hitch a ride. Maybe we don't get our full 2 points when we hitch this ride. So if we get a point, okay, the day's half done. And the next ride that we hitch, maybe we catch our other point there. Okay. 1 plus 1 is still 2. Let's see. I don't want to leave any question unanswered. That was helpful. Thanks. Thank you for saying so. I appreciate it. Thank you all. What workshop do you go over this in? Keith, we have 197 workshops. I go over this probably every workshop, I'm guessing. And if you go to youtube.com/CFRN, there's a whole bunch of archived radio shows. And if you go to the last, when you see the really big ones, like 3 and 4 hours, that's when I spend like an hour, hour and a half teaching and what I call the after show. You'll get tons of this stuff, okay? youtube.com/CFRN. You'll also find it on the Google Plus page. You'll also find it all throughout our blog, through our website. We've been at this almost 10 years, so there's quite a body